Hello traders, how are you? Vladimir here from Home Trader Club. Welcome to the weekly Forex forecast. As always, before we begin, big thanks and thumbs up to 8K Broker for supporting our community, and you can continue and enjoy your access to all the amazing offers, including the access to Home Trader Club, all the trading system, private mentoring sessions and more. Follow the link below this video in the description. First one for today is the euro dollar, and a very interesting thing happening right now. But before that, the non-farm payroll disappoints. That's the bottom line. The job market shrinks and most likely leaves no room for the Federal Reserve to do anything besides cutting the rates. The biggest question, what will happen at September 17th is, will the Federal Reserve cut once, or will hint that more cuts will happen during this year? And that's where the market, that's the phase of the market we currently have, and that's what the market is anticipating. With that in mind, the euro dollar has two classical ways of price behavior at the moment. So let's go to the chart. Quick follow up on what we discussed last week. One of the scenarios we were talking about, a break above this range should open up the doors for further rally. This view of mine did not change. I still believe that the euro dollar is capable, and I would even say it will do the move. The question is, will it happen from here, or we will first of all make another false drop before the rally? With any case, I believe the euro is heading further, and 119, 120 should be the next zone. 122, 123 are potential next levels. This is a key supply level which I believe later or sooner will be retested. So the bullish view and the bullish plan remains the similar. We should be able, let me just draw it correctly and more accurately, high to high. We should be able to see the euro dollar closing above this zone, holding above the volume profile area we can see here, making some retests and retraces and pushing it upside. That would be the ideal scenario. After that, I believe the euro should form is bearish divergence and from there drop, but that's already a long story, and probably future videos and discussions. But all that could turn to be a trap if the Federal Reserve says, hold the celebration, we will cut once and that's it. Euro dollar is capable of flipping that to a zigzag, 2 waves down, 2 waves up, and then make some sort of a break to the downside with this low broken, with the price holding below this volume profile. And if that happens, the euro is capable of retesting the zone of 114, 113, maybe even below that. And if we go to the members area of Home Trader Club to take a look at the market trend snapshot, the euro dollar is on a clear bullish momentum when the 1 month is above 1%. But look what happens with 7 days and 24 hours. They are flirting with the zero. That means the buyers are getting or prepared for the next boom and to push further, because they are around the zero, around the level where the forces are equal, still under bullish control, but in a weak form. And the other option is, again, it simply means there are not enough buyers, and that's the trap scenario we were talking about before. The next one is gold. Gold managed to break this range a couple of weeks ago, a scenario we were talking on one of our recent weekly forecasts, and that managed to push up and reach all-time highs. As exciting as it is, and have no doubt it's super exciting, I want to remind you that we are on obviously clear overbought conditions on the monthly chart, while the weekly chart, oh, by the way, monthly chart also is overriding the upper Bollinger Band, which puts more pressure to the downside, and the weekly chart is about to create a bearish divergence when we see higher highs on the chart at the end of these 5 waves, and bearish divergence, higher highs on the chart, lower highs on the moving average of the MACD, potentially RSI, will most likely put the pressure here for a reversal. And the way I anticipate this one to go, by the way, take a look on the daily chart, which is getting close to the overbought by itself. Last time it happened was actually not too far in April here, and we all remembered the drop down that came after that. So the way I see that the current peaks, as they form, maybe here, maybe one more, right, should start and form false breakouts, fake peaks, fake attempt to rally, attract some bullish money before the sellers actually take the control and push the prices down. I don't know if that would be a long-term trend change, but I believe that the current highs as they form are very close to become trap highs before the price actually drops. What do you think about the gold? Where are we going from here? Let me know in the comments. Next one I want to discuss about would be the dollar yen. Dollar yen is under this place where something big is most likely gonna happen, either a rally or a drop. And the reason I believe a drop is coming is because on the monthly chart, and the weekly chart, we saw this major bearish divergence between the peaks. Usually that means that we are going to face a BCD correction or some prolonged range. That means sell the rallies in both scenarios, and that's why I am more bearish than bullish in that case. And if we take a look on the daily chart, at the end of the 3 waves that we experienced here, we see that the dollar yen is now forming this classical range. So what I want to see on the dollar yen is actually break below this range and break below this key supportive zone we see around the 146.20-ish. If we manage to see the price breaking below that area, the daily range and the support we form on the daily chart here, and the price to hold below this volume profile, what I want to see is lower loss on the chart and lower loss on the indicator for full synchronization. That for me means sell the rallies, and that is exactly what I am looking to trade on the dollar yen. And if we go back to the members area of Home Traders Club, take a look on the dollar yen. All the numbers, the monthly, the 7-day and the 24 hours, are negative. The monthly is around the 1% significant change. The 7 days and 24 hours, similar to what we saw on the euro dollar, pretty much flat. That means something big is coming, either upside or downside. And the reason I am after the sell is, as explained before, due to the waves of the weekly chart. So break below the daily range, break below the daily supportive line, sell the rallies is the trading plan. And the final one, the Bitcoin. Last week we were talking about sell the rallies. Few weeks ago we were talking about the expected false breakout here, fake high, bearish divergence and a drop to start and happen, and here we are with the first leg to the downside. I believe that this bearish move is not over, and every rally here for me means look for sell opportunities. Couple of key levels to pay attention to. Broken support becomes resistance. If it holds, that's a classical sign for bearish continuation. Next key zone is the first high of these 3 waves drop. That's around this zone of 117,000. If this one is retested and respected, then again I would be after selling the Bitcoin. As for now, I believe the 105 should be retested. Afterwards, the level of 100,000, classical, historical, magical round number, which already was retested in the past several times and created a huge demand area. That's the zone I believe should be retested next. So that's my view on Bitcoin. And that's pretty much it for this week. I hope you find value in these trading opportunities as always. Thanks for your time watching. If you enjoyed this video, please don't forget to hit the like button. And if you are new to our channel, please consider to subscribe with the subscribe button below this video. And I want to take the opportunity and to invite you to our trading family, Home Trader Club. Enjoy your access to our full comprehensive courses, real-time trading opportunities, and real-time trading education. Follow us with the link below this video in the description. Thanks for watching. Best to you and yours. I'll see you soon with more. Good trading. Bye for now.